Hello, I'm Bernard Hickey with the Daily Briefing from interest.co.nz. Today we'll look at the latest news from finance companies, including fresh reports from the receivers for Capital and Merchant and Provincial Finance. And we look at a trading halt for MFS Pacific's parent on the stock market. We'll also look at the lessons of history from the Depression of the 1930s and why the US Federal Reserve is so determined to avoid a repeat of that with the latest credit crunch. Firstly, a couple of updates in the finance company sector. The receivers for Capital and Merchant have come out with their first estimate of how much the 7,000 investors in the finance company will receive back. Unfortunately, the news is bad for those holding $167 million worth of these debentures. The receivers Richard Simpson and Tim Downs at Grant Thornton estimate these investors may recover up to 59 cents in every dollar invested over time. But that is dependent on a bunch of things happening. These include the completion of some development projects or the sale of some of those projects. The receivers are also assessing some insurance taken out on most of the loans that Capital and Merchant have made, but currently the receivers don't reckon that insurance is worth anything. The picture they paint about what went on at Capital and Merchant is not pretty. Essentially, 35% of the assets, or $90 million of loans, were made to two parties. So Capital and Merchant borrowed from 7,000 people and lent a third of that money to two people. Also, when Grant Thornton was appointed as first receiver, it was physically barred from entering the premises. And when it went to court to enforce the receivership order, the judge said that Capital and Merchant shouldn't have been taking in investments in the months before it collapsed. The receivers say they are investigating specific transactions that went on just before Capital and Merchant collapsed, but they say they can't give any details because of potential legal consequences. You can make up your own mind about what that might mean. Elsewhere in finance company news, we've also got the latest report from Provincial Finance's receivers. Remember, it was one of the first of the big finance companies to collapse. PricewaterhouseCoopers have come out with their latest report, and they say Provincial Finance has returned 72.5 cents in every dollar to holders of those debentures, and says it still expects investors will receive back most of their capital, but not the accrued interest. PricewaterhouseCoopers says it is still suing a number of people over allegations of fraud. And finally, in finance company news, shares in MFS New Zealand have been halted on the NZX. MFS New Zealand is controlled by Australia's MFS Limited, and the shares have been halted so MFS New Zealand can prepare a statement updating the market on what's happening with MFS Limited. The Australian parent's shares slumped last month on fears it may not be able to service its debts. Since then, its CEO has resigned and it is considering selling assets to raise cash. We should get the MFS New Zealand statement through within a couple of days. And finally, a quick pointer to a very interesting opinion piece we've put on our site from columnist Neville Bennett. In it, he looks at the differences between the lead up to the Depression of the 1930s and the latest financial market slump on global markets. He finds quite a few similarities and concludes the Fed is doing the right thing by trying to reflate liquidity in credit markets and by cutting interest rates. Neville's opinion piece shows just why the Federal Reserve is so determined this time not to repeat its mistakes of the past. It turns out it was the Federal Reserve that turned the bad situation of the 1929 stock market crash into the disaster of the Depression in the 1930s. That's because it raised interest rates and refused to back failing banks back then. Those decisions led directly to an economic catastrophe that halved US GDP and triggered the collapse of 9,000 banks. Check out this opinion piece for a great weekend read. You can find it from the link on our homepage. I'm Bernard Hickey from interest.co.nz with the Daily Briefing. Catch you on Monday.